Good afternoon, traders. This is Christian Farmer. It's Tribeca Trade Group, and this is your end of day market recap for Friday, April 4th. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving any advice or recommendations. Please read the full risk disclaimer there. Well, if you watched yesterday's video, there's probably not that much of a change not that much of a change of what you're seeing here on the left side of your screen, just red all the way throughout here. Just pretty amazing in terms of what some areas. I know that they were talking about on CNBC, like they like to talk about this definition of a bear market being 20%. I mean, there's so many stocks that have gone down a lot more than 20%. Like, and even this week, I mean, look at even energy, which I talked about. Energy had that false breakout, and to be wary of that. That energy does that quite a bit. But look at even, GDX was down 8.8% today, one day. XOP, energy, oil and gas, as well as oil services, both down, one down 10%, one down 12%, right? So if you're meddling around with trying to figure out like if something is the definition of a bear market, by percentage, I mean, you could look at various different stocks that have fallen a lot more than like 20, 30% over the last, couple weeks. It makes no difference. It matters. The characteristics matter, and one of which we've talked about how breakouts fail. And, another one too is that there are no hiding places in a bear market. Certain things like today, you finally saw like Berkshire Hathaway, which has done really well. So I'm just going to go through a couple names first, and then we'll talk about more about what I'm thinking for Monday. But here's Berkshire Hathaway down about 7%, breaking support, 50-day moving average, breaking below the April value area. Like all of these hiding places, what happens like in the evolution of a market sell-off is they all get hit. Cardinal Health is another one that's held up really well. This took out about what 10 to 15 days of price action to the upside. So this is why I don't buy some of these things up here, that have acted pretty decently. You know, I I I think what you'll find is that these are things, by the way, I'm going to probably mention this a couple times in this video, is that these are things to write down after this week. I talk a lot about, one of the big market sell-offs that I traded through, and that was the financial crisis in 2007 to 2009. And one of the regrets that I have from that time frame is I never really took a journal, of different things. There's so many different things that were going on a day-to-day basis. I talked a little bit about this in yesterday's video, how I didn't think that we've had extreme fear. And I hope that helped. I try to do these videos to help and to also there's so many wrong or incorrect things that you'll see on social media. And part of what I do is to try to just give you the facts, and I've talked about that over the last 3 weeks. I've talked about how, for example, like the CNN Fear and Greed Index, extreme greed or extreme fear is not really that. It's just something that somebody put in a model, and people get warm and fuzzy because it spits out something to them that says, one of the other, and people get very comfortable with that without actually looking at the results to see if it's really extreme fear or not. So I try to go through some of these things, go through some of those misconceptions in some of these videos and say, hey, that's not right, and it's not right. And whenever I do that, I always give a particular example. One of the things as well that we heard a couple weeks ago is like it's record put volume. And I'm like, guys, that doesn't mean a damn thing, because you can't compare that to 5 years ago, because there wasn't 0 day data expiration options 5 years ago. So of course there's going to be more put volume, right? And the other thing that people were doing is like they were saying record put volumes, and they weren't looking at call volumes. I don't know what somebody is looking to achieve by doing some such a thing, other than, trying to get clicks. You have to look at the equity put call ratio. That gives you a sense of how many puts are traded versus calls, not just overall put volume. It's just one of the stupidest things I've ever heard of. But hey, there's been a lot of stupid things that we've heard the last couple of weeks. So let's start with that. If I can bring up the equity put call ratio. Now, I get annoyed because the SIBO doesn't publish these numbers until see if I can bring equity put. They don't publish these figures for some reason to like 11 o'clock at night. They used to do it like at 8 o'clock all the time. So what I'm going to talk a little bit about is, do we actually have extreme fear in this market? And I hate to use the word capitulation, but we want to know if there's true capitulation in this market. Why? And I'm not going to go over every term. If you don't understand a term that I ever mentioned, there's no excuse not to go and look at Grok or look at any AI model and put a term in such as capitulation to figure out what it means. Like that's what you should be doing. Not just me, whenever you hear a term on social media or on financial media, whether it's CNBC or Bloomberg, and you hear a term that you don't understand, do 15 seconds of research. That's all it takes. Bring up that term, put it into Grok, and it gives you an answer. You know, in the matter of under a minute, 15 seconds may be a little bit aggressive, but under a minute, you're going to get the answer to your question. So, capitulation, why you hear so much about capitulation is that's when folks throw in the towel and say, "Hey, I give up on this market. I'm not buying the dip anymore." And it's a psychological thing. It's a contrarian signal that some folks say, "Hey, we've got capitulation. That could mean that we finally get a short-term bottom in." And it's just the way it's one of those things where you hear me talk a lot about buy the rumor, sell the news in trading. And capitulation is another one of those terms where sometimes you get a tradable bottom when people finally throw in the towel. Now, would I say that this is again, I don't know what the final reading is for the put call ratio, but at least we're getting someplace. At least there is some fear. Like so an equity put call ratio over one tells me at least that there's some fear in this market. Whereas a couple weeks ago, for whatever reason, there hadn't been any fear in this market. All right. And also when you look at the VIX, so, here's what this looks like relative, and you could look at some of the other pullback, look at every time that this equity put call ratio spikes up like this and see if it's a tradable bottom, right? Because it's represents some gauge of fear. Now the VIX, right? The VIX finally got up to like a pretty severe level, right? This is also something in the fear and greed, CNN Fear and Greed Index. They were saying their model says a 22 VIX is extreme fear. Now that you see it at 45, do you think 22 is extreme fear? I hope you know the difference now. So if you go back, of course, we had this crazy situation where the VIX spiked up like this with the yen carry trade, but I think that you want to look at this over more time, right? And kind of look at maybe over the last 30 years, right? And see that we've had situations 2020 where the VIX spiked that to me was extreme fear, right? When markets were shut down, not markets, but there were shutdowns across the country. You could see what happened in 2008, right? So you could put this on a relative basis and say, okay, we do have fear in this market. How does it compare to other market sell-offs? Well, you could go through and you could say all these other spikes, some of them, when it's like individual like this, led to market bottoms. Other times they could go a lot higher too. So I want to put that in your mind too, right? Things could get a lot worse before they get better. So I think it's nice that we've gotten to the place where equity put call ratio has finally there's a lot more puts trading than calls. I think it's notable that 45 VIX is no joke. That's a very high level. Also up volume versus down volume today got to a very extreme. I was complaining about that yesterday because we got so close. I think for most of the day yesterday, down volume was about 87%. Again, if you Google or Rock or whatever definition of capitulation with up volume versus down volume, it's usually greater than 90%. So today it was 92%, right? So 92% down volume. So that represents some sort of capitulation. Now, what I would have said is if this would have happened on a Tuesday or Wednesday, I would have said, great, that's pretty good. Friday going into a Monday, I think is very difficult because, first of all, one of the things I said very, very early on today is that markets don't like to bottom on a Friday going into a weekend. So we could see a gap down on Monday, and maybe that signals it. I wouldn't be surprised if that would happen. I think that's probably an outcome that I would be looking for. But we're also in a very headline-driven market, and we don't really know what's going to happen at this point. And case in point, I'll tell you, I was wrong twice this week, right? You don't find too many people admitting that. Hey, I was wrong about this. I've been doing this a long time. I know I'm going to be wrong. I'm going to be wrong a bunch of times. What I try not to do is stay wrong. What was I wrong about this week? I did not think this tariff event that was well telegraphed. I thought that it might be an event that everybody's aware of, and it won't be as bad considering that it's highly expected. A lot of times that happens in trading when everybody anticipates something. I talked about, buy the rumor, sell the news when a company has a big event. This was more of an extreme event for me. I did not expect that those level of tariffs were ever going to be instituted on other countries. So I find that very bizarre. So number one, I was wrong about that. I did not think that we were going to get anything like that on Wednesday's event. I thought we were going to get more of a softer, like reciprocal tariffs, that type of thing. And I think that that was priced into the market. What was announced clearly was not priced into the market. Secondly, the Fed today. I would have thought the Fed, and this is what I will tell you what I was looking for. And again, you can disagree with me. I know a number of people are disagreeing with me, but this is all Powell had to say today. All right. He spoke today at what time? 11:25 today. And this is what I was expecting because I thought it would be logical. Hey, the market looks like it's going through there's some stress in this market. We're going to be watching it very close to see if we're not going to do any action today, but we're there if the market needs it. Right. And we'll be watching very closely. We're concerned. That's all Powell had to say today. What did he come out and say today? No, we're not really concerned. No, we're inflation expectations are well anchored. Um, to me, that's not the right response, considering what the market is telling you. And you're not going to find out these things in the data, such as inflation data or jobs data, until well after the fact, right? The market is going to tell you things. And I am dumbfounded at several things that have happened this week, but this is the second event that I was dumbfounded at that they're not looking at credit spreads. Credit spreads, I'll show you and again, this is why I do these videos, is so I can give you some examples. Here's what credit spreads did. All right. This is a dramatic move. And to put these things in perspective, we're not as high as we are in August, but look at how fast we're moving. Look at the velocity of the move. Did we come off the highs here like this? No, we're rising and we're rising very quickly. Also, so this is just IEI over HYG, that's duration matched, right? And again, this is high yield credit spreads. You have to look at the one over the other. You can't just look at what HYG did today, right? I heard this earlier, because that just is giving you the price. It is not covering what the overall interest rate move is. What did overall interest rates do today? Well, they declined, which means bond prices across the board are going to go up. But HYG is not going up as fast as treasuries are. That's the whole spread dynamic. And a whenever you're looking to compare a fixed income instrument, right, on what the move was, what somebody told me, I'm not a fixed income expert, but what somebody told me in fixed income is you have to look at the spread over treasuries, right? And you do that in you do that comparing anything in bonds. It's a very simple thing, and it's something that I learned years ago. All right. Also, you could look at, if you want a different view of this, you could look at high yield CDS, right? What's going on in basically like credit default swaps, right? I have to wait for it here for a second. There you go. Look at this, right? Does this tell you that there's some market stress going on? And again, this is the 1 year chart. I always like to give perspective, but this is going up rapidly, right? I can't tell you where this is going to stop because we closed at the damn highs today, and you don't know what Monday's going to bring. So the fact for the Fed president who's supposed to be monitoring this situation, to come in and tell you about, the reporters for today. I mentioned this earlier. I'm going to do it again. But instead of asking really good questions and say, hey, what do you think of the high of what's going on in credit spreads? What do you think what's going on in the CDX markets? Right? Instead, they asked him what his favorite color was of tie and what his favorite Grateful Dead song is. I just I'm again, the word that comes to mind is I'm dumbfounded at this type of thing. Now, I said this and people said, well, what do you think about what the administration is doing? I'm the same way. I am astounded that someone could come in and think that they're going to sell off the market on purpose and then think that they could bring it back up. I wouldn't want any market participant to be thinking that they can do that type of thing. I wanted to bring up one other thing, which again I've been talking about with is what goes on. And Tom McClellan, who's a great follow on Twitter, has talked about this too before. The 2-year yield. Why is the 2-year yield kind of important, or any bond yield, or the high yield spread, right? Because market prices fluctuate on demand and supply. They're going to tell you what's going on in the market currently, not some labor statistic number that is from weeks ago or some CPI report that's from weeks ago as well, right? That's old data. Market prices move based on the current environment. And right now, the 2-year yield is dropping, right? We're down to 3.6, right? And I mean, the other thing that I want to point out here is that the interest rates, like it would be one thing Powell to come out and kind of, be relaxed and not really worrisome. That would be one thing if the current rates, Fed fund rates that they're holding, would be at 1%. We're not at 1%. We're not at 2%. We're at 4.5%. So we're already in a very like tightening situation, right? Where they're sucking liquidity out of the system. So they're already heavily tightening with this rate. Why it hasn't been a big thing before is because the Treasury was, if you go back a year ago with Janet Yellen, they were doing everything to stimulate behind the scenes, right? Well, they're not doing that anymore. And that full tightening is happening right now. Now, what's the harm here that the 2-year is sinking, and the Fed funds rate, which is being artificially held up by the Fed? What's the danger here? Well, all you have to do is look at other situations. What happened back in 2007 and 2008, right? And I've already mentioned, of course, I traded through this time frame. It was the financial crisis. Do you think that that was a big situation? I would hope that you do. And I would also point to what happened here. Notice what happened. They had the Fed funds rate at a very high level. Now it was higher than it currently is. They had it around 6.7%. And what was the market telling you at that point? The market was showing some stress and starting to break down. Now, was the Fed quick to act back in 2007, 2008? Nope. They were also behind the curve because they were waiting for their market data to come out about what's going on with the jobs report and what's going on with inflation. But meanwhile, the 2-year yield was telling them everything that they needed to know. So that's why I'm very disappointed, and wrong too, that the Fed did not take a more, hey, we're worried about the current environment. Um, so there you have it. That's why you saw what you did today, and that's why I knew it. Like when that, so meanwhile, I thought that the Fed would take a more appropriate tone, in my opinion. Once they didn't, I said, oh my, I was like, that's not going to be good for the market. And you don't have anyone now caring about the equity market. So we can't control what these things are doing. We can't control these folks, whether it be what's happening in the executive branch or what's happening, in terms of monetary policy. What you can do is take steps to mitigate, because we can't control any of that, right? But that is not a good environment for equities, and hence we have, how much did we fall today after already starting down for the day? Qs finished down 6% today. They went down 3.5% from the open and sold off once that news happened. And I did trade some SQQQ today. I wish I would have traded it into the close. I've covered that this market very bizarre this week in terms of these types of actions. We've talked about the Fed funds rate. We've talked about what happens in bear markets, that there's no hiding places. Capitulation. I don't know if we've seen enough of capitulation. I think some things say yes. I don't like the fact that once again we sold off hard at the end of the day. Um, I think Michael Santoli just said this on CNBC. I agree with him. The close is more for professional investors. Retail is not thrown in the towel yet. There apparently was new inflows to ETFs this week, right? Retail has not thrown in the towel yet. They need to, a lot of times, like they need to capitulate to see a bottom. So I don't know if we've checked enough of, I think we're on that way. And I think Monday is going to be very interesting. We talked about the VIX, we talked about high yield bonds as well, giving a signal. All of these things are not particularly good. We just don't know if we're washed out yet. Um, I want to start with IWM here. I'll go through just a couple of the technicals. Um, this went through the bottom of value like a hot knife through butter. Now, we did put in some type of stabilization here, but we've bearish 80% rule complete. Qs, I mean, just like that, we're almost there. I mean, this could happen in the overnight session. That we were only, I think that's wrong. Let's see. I gotta zoom out here. We're about 1.4% away, which is at this point nothing, considering we're down over 6% today. So we're pretty darn close to the bottom of the value. And again, that's a support level that we'll have to pay attention to when we get there. S&P future, SPY, not quite there. So bearish 80% rule in effect. Maybe we get some stabilization at this VPOC, which is very close by. We could take that out in the overnight market today. S&P futures, I think now this is going to look a little bit different. But I think this already broke through and took this VPOC out. Bearish 80% rule complete for S&P futures. So that's where you have it. That's where I'll kind of leave you for today. And again, I would say if this type of price action occurred on a Wednesday or Tuesday or Wednesday, maybe we'd work our way through this and maybe we get a tradable bounce. But there's still so much uncertainty out there that I think Monday morning could be rough. But I don't have a crystal ball, and there could be some tweet that comes out over the weekend that the market likes. I think there was a tweet out about working with Vietnam. I traded Lululemon today for some profits today. I did not stay in the trade very long because this is a day trader's market. This is not a trade. This is not a market for me anyway. That is a swing trading environment. So not really doing much in terms of that. All right, guys, have a great weekend. And what an interesting time. Write down some of these things, lessons from this week. One of which, well, anyway, I won't get to. But hope this video helps and hope you guys have a great weekend. See you on Monday.